One thing, though, that's still a big red and a miss is the money supply. Money supply is now negative on growth. This is a quantitative tightening. We've been talking about this. And if we were to continue to see money supply deteriorate, despite the technicals, we would just say that's a false signal. Stay away. So we're not saying, all right, the market downturn's over. You need to invest because we're starting to see some things that look good. We want to see this stabilize and begin to move up. Now, there's a couple of ways that money is created in the system. Over the last few years, really last decade, a lot of it has been created by the Fed and their quantitative easing, where they basically go out and buy bonds by printing money to exchange those. And now that they're taking those bonds back out, they basically pull money out. But the other way is that banks loan money out. And we are starting to see that, especially as businesses are seeing inflation and saying, you know what, I can go ahead and borrow. Yeah, the interest rates are a little bit higher, but they're not as high as what we expect inflation to be. And we have talked about how the CPI may be starting to get a breather, but the way that shelter is, you could also see that inflation number continue to stay elevated for quite some time and above what interest rates are. So companies are borrowing, which is expanding the money supply. And we want to see that stabilize or actually begin to grow before we say, okay, we're probably towards the bottom.